According to the Federal Reserve Bank of New York, community banks and community development financial institutions achieved net lender satisfaction scores of 73% and 76% respectively, which measures the overall experience small businesses have with their lenders. That compares with only 49% satisfaction rate for large banks. Reasons for this discrepancy include unfavorable repayment terms, higher interest rates, and issues related to consumer complaints. While you have modestly been increasing your small business lending, last year your banks accounted for only 25% of all loans to small businesses, which frankly is not good enough. As drivers of our economy, we must promote small businesses, and any impediments in access to credit can undermine their business, leading to job loss. Mr. Moynihan, the CFPB has not collected small business lending data that it's supposed to do under Section 1071 of Dodd-Frank. Unlike the mortgage market, we have far less information about what is happening in the small business space, including potential discrimination. To ensure we have a fair marketplace, shouldn't policymakers have access to that kind of data?
Well, I think just on small business lending generally, as I said earlier, we did $8 billion of originations last year. Our portfolio is over $36 billion to small loans defined by the FDIC data, which is public, loans to under $1 million in size. So it's a major business for us. And I'd say that our satisfaction level runs 84% by our surveys. So we're heavily involved in small business. And not all that data is perfect. That data is publicly available. So I'm not sure what the Consumer Bureau is going to collect. But I think the data at the FDIC has been delivered for years to get the loans outstanding under $1 million that you make, and we supply that data, and that's what I was citing to you, sir.
And how much consideration is given to the bottom line of your bank when you make these decisions on how much you invest in small businesses?
Well, it's a major part of our franchise. It's 9 million small businesses directly, 3 million customers who also have small business we do through the consumer side. And so we do it. It's a competitive business with all the participants, the 7,000 banks that are out there. 40% of our small business are women-owned businesses. It's a robust, disciplined practice for us all over the country, and a team that leads that, Sharon Miller, leads us for us, does a fantastic job.
Thank you for that response. Since the financial crisis, Citigroup has had a troubling pattern. In March of 2019, the OCC fined Citibank $25 million for violating the Fair Housing Act. The bank had a program to provide discounts on closing costs or reductions in interest rates to certain eligible customers seeking a mortgage. The bank failed to offer these benefits to all eligible customers. Some customers were adversely affected because of their race, color, national origin, or sex. The bank agreed to provide 24,000 customers impacted by the bank's discrimination approximately $24 million in redress. Why didn't Citibank have appropriate policies and procedures in place to ensure that it did not illegally discriminate when it implemented a program to provide benefits to certain customers seeking a mortgage? Mr. Corbett?
Congressman, first off, I'd like to apologize to those of our clients who were affected and didn't receive that, as we would call it, relationship pricing benefit. It was an incident or an episode that we self-identified and self-reported to our regulators and came up with our remediation to go back, because it's our full intention and it's in our interest to make sure that our customers receive the benefits to which they're entitled. Our own work would say that of those 24,000 people, there weren't race, ethnicity, gender biases in the data that we compiled, and we would say that in there are shortcoming or our error really was one of not having our employees properly
The
trained.
gentleman.